Can widows get their partner's state pension? So that's the topic that this video is going to focus on today. So, I recognise losing a partner can bring big financial worries and certainly what the future might hold. And working out state pension inheritance can feel really impossible at times. The thing is, what I find is that very few people actually understand what claims they're actually allowed to make. So what happens is thousands of widows lose money because they don't fully understand the rules. For me, the whole setup is far too difficult, and what I'm going to try and do in this video is break down everything into clear, simple steps. I'm going to start by explaining what inheritance rights you actually might have available, and then I'll break down the two different pension systems. You're going to see the exact amounts you could receive from inheritance claims. I'm also going to look at bereavement support payments and how they work differently, and I'll explain how that payment also works. Then we're also going to cover something that I find catches people out, and that is the remarriage rules. So we'll talk you through what they actually mean, and then finally I'll walk you through claiming everything that you're owed. So my name's Sakis Sane and I run financialeducation.co.uk, and I've got over 25 years experience of helping people manage their finances. Let me start by explaining exactly what inheritance rights widows have from state pensions. So the key thing is that your partner's full new state pension cannot be passed to you on death, and the new state pension amounts to about £12,000 a year at the moment. The basic new amount dies with your partner under the current rules, unfortunately. However, there are some exceptions. So you may get portions of any additional state pension that's been built up. An additional state pension came from workplace earnings over their working life. However, marriage or civil partnerships at death is absolutely required for the inheritance. Unfortunately, unmarried couples get zero inheritance regardless of how many years you were together. So even living together for 40 years gives you no legal right to a claim. So the critical question is when your partner reached their pension age, or rather their state pension age. So pension age before April 2016 triggers the older, more generous rules, and in that scenario up to half of additional state pension can be inherited. But this is a key thing, getting remarried before your pension age cancels all inheritance rights forever. Your new spouse becomes your only pension connection going forward. That's key to remember. And also it's key to remember is cohabiting couples cannot inherit additional pension through their bereavement payments do work differently, and that's something we'll cover later on in the video. The reality is that many people discover this shock after it's too late. So when they're married really does matter just as much as being married, and you need to be married or in a civil partnership at the point of death. Additional state pension inheritance only works for legal spouses and partners, and that's the key thing to remember with it. Due to quirk of the UK pension system, one crucial date created two totally separate pension worlds with completely different rules, and that date was 6th of April 2016, and that is when the new state pension was introduced. So men with birthdays before 6 April 1951 used the old system rules. Women born before 6th of April 1953 similarly fall into the old system terms. So two separate components made up the original state pension structure, and the basic state pension is currently around £176 a week. Additional state pension added money on top for those with earnings. So your working years and salary levels determine this additional pension amount. Company employees typically accumulated far more than the self-employed workers did. So everything merged into one payment when the new system launched properly. So the new state pension pays around £230 a week, but to get that you need to have 35 years of qualifying contribution. And the basic new state pension has no inheritance provisions at all now, whereas the old one did. So protected payments may give you half under very specific inheritance conditions. And marriages starting before April 2016 plus partners' pension starting afterwards will trigger this. The same rule works if they died on April 2016 onwards. So which birth date your partner has determines their pension system entirely. Your own birth date determines which system applies to you personally. So working out inheritance requires checking both dates against the April 2016 divide. So if you're entitled to something, obviously the key question is how much are you going to get? Well, calculating inheritance depends entirely on which system you covered your partner, as we've discussed previously. The old system participants offer significantly larger inheritance amounts to surviving spouses, because there's an additional state pension as well called SERPS, and that provides the bulk of inheritance money. So half their additional state pension is a standard inheritance amount usually, and the additional state pension reaches about £222 a week, and annual amounts work out to roughly £11,500, and that can be added to your pension. The thing is, all of it transfers only when death occurred before October 2002. After that date, death reduced the maximum inheritance to 50% only, unfortunately. What that means is that employee status was essential for building any additional pension at all. And self-employed workers almost never accumulated additional pension to pass on, unfortunately. And workplace pensions, contracting out, which is something that people used to do, also significantly cuts down any inheritance tax, inheritance available. Unfortunately, contracting out meant, and it's a term that you may have come across in the past, meant that workplace schemes simply replaced the government additional pension instead. So you basically opted out of the government pension and took the workplace pension. There's also something called graduated retirement benefit from pre-1975, and that might add a small amount as well. So the weekly additions for that are not very big. They're typically around £2 or £3. So what you're entitled to does change, as I said, depending on when you worked, when your partner worked, when they were born and when they died. I'm now going to cover something called the Bereavement Support payment, which I mentioned earlier on in this video. So this payment operates independently from all state pension inheritance rules. What it does, it provides an immediate financial support after losing your partner, and this payment effectively helps you just get by to start with. So your partner's death must occur whilst you are below the state pension age, and getting this doesn't depend on inheriting any state pension whatsoever. It's completely independent of that. The initial lump sum comes first, then 18 monthly instalments follow after that. So there's a higher rate, and that provides £3,500 initially, plus £350 every month after that. So the total reaches £9,800 after 18 months if you claim everything quickly. The opposite to that is a standard rate, and that offers £2,500 initially plus £100 each month going forward. And this adds up to about £4,300 across the 18 months. Responsibility for children determines whether you receive the higher amount or the standard rate. Child benefit entitlement for anyone under 20 counts as having children. No dependent children means standard rate applies to your claim. So that's the key differential between whether you get the higher rate or you get the standard rate. And of course, adequate national insurance payments from your partner trigger your eligibility here. So 1 full year of contributions since 1975 normally satisfies this requirement. So basically, anyone that has worked since 1975 will probably satisfy this. Claiming within 3 months guarantees receiving absolutely everything that you're entitled to. So it is really important to try and do this as soon as you can. Claiming between 3 and 12 months after death reduce the monthly instalments that you're going to get. Lump sum still comes, but fewer monthly payments follow your claim. And claims between 12 and 21 months lose the lump sum completely. So again, really important that you try and do this as quickly as you can. And only reduced monthly payments remain available at that late stage. Nothing remains claimable after 21 months have passed following the death usually. Tax-free status means no income tax bill on this payment, and benefit calculations ignore this payment completely for 12 months after you start to receive it. When it comes to cohabiting couples, they qualify for higher rate when child conditions are met. But law changes in 2020-23 open this payment to unmarried parents as well. So it doesn't matter about your status. If you have children, you're entitled to claim for the higher amount. Now I'm going to cover a topic that I find sometimes catches people out, and I've called this the remarriage trap. So getting married or entering a civil partnership completely transforms your inheritance situation. So when you choose to remarry matters far more than people actually expect it to do. So marriage before reaching pension age typically eliminates all inheritance rights completely. So every claim linked to your deceased partner vanishes at this point. So even 50 years of previous marriage doesn't protect your inheritance right. A new marriage cancels every previous spouse's pension connection that you had. Marriage after pension age works under completely different rules though. So inherited state pension already in payment continues throughout your lifetime. So what that means is that your new marriage has zero effect on money that you're already getting. And your own pension age matters here, not your deceased partner. So both men and women currently reach state pension age at 66. But between 2026 and 2028, this is going to rise to 67. And the government pension age calculators will show you your exact personal pension age. So living together with a new partner doesn't activate remarriage rules. Cohabiting leaves all your inheritance claims completely intact illegally. A marriage or civil partnership before pension age triggers this law. So people remarrying due to their 50s frequently fall into this costly trap, and annual losses reach thousands of pounds by not waiting longer. Which this might seem like a really odd thing to say, but a strategic delay in getting married until after pension age deliberately protects future income streams. So in this scenario, romance might be taking a back seat when decades of income hang in the balance. So let's finish by quickly recapping all the essential points about your partner's state pension inheritance. So again, full state pension cannot be inherited, but the additional portions may be. And the additional state pension your partner accumulated provide these inheritance amounts. And April 2016 represents the dividing line between the two separate pension systems. So pre-April 2016, pension ages offer better inheritance options overall, and in this scenario, half the additional state pension represents the usual inheritance amount. And some widows receive over £11,500 annually from this inheritance source. We also covered the Bereavement Support payment, and that operates separately, and that could provide up to £9,800 in total. And again, that depends on what rate you get. And the 3 months claiming deadline ensures receiving the maximum payment available. And to recap as well, marriage before pension age typically eliminates inheritance rights entirely. So in some scenarios, it might actually be worth waiting to get remarried until after you've passed your state pension age. Marriage after pension age leaves existing payments completely unaffected. And the other sad thing to remember as well is that the government and the DWP don't always get things right. Unfortunately, errors on widows calculations remain common across the system, so you really do need to check what you're entitled to. Corrections have totaled over £800 million, and that's been redistributed so far by the government. And if you think something doesn't feel right, absolutely challenge it. Go back to DWP, say the calculation appears incorrect or unreasonably low, and then they've got a duty to go back and recheck it. Written documentation protects your interest throughout the entire process, so try and keep as much of this as you can in writing. So hopefully you found this video helpful. If you did, please do give it a like and subscribe to the channel for more pension related topics. Finally, good luck and goodbye.